All right. Welcome, everyone. This is yours truly, David Morgan of themorganreport.com. And today I won't say special guest, I'll say special friend. John Lee and I have known each other for a very long time, and he is CEO of Silver Elephant, and he's been CEO of many companies. We're going to talk about that probably later in the interview. But I have to point out for people, John, what you and I both know, but I don't think very many people know, going way back to the past, that you actually worked for James Turk at GoldMoney very early on.
Yes, I
And
did.
I believe you got some compensation in stock or something, I believe, and walked away and started doing what you're doing. But I think that actually became pretty lucrative over time, right?
Yes, I received on stock gold money stocks, and I was paid in gold, and so I came out pretty well. But then when after James sold his company to this I think it was a Jewish guy, I can't remember his name, Ray Sandberg, and then so I cashed out. I did okay, and
Yeah.
you know what? It was passion. It was always been gold. It's just that gold mining provided that technology angle of which was how I started my career in the Silicon Valley. And you're right. A blink of an eye is being. I think we're just celebrating our 20-year anniversary. Getting opening in the early 2000s, and met you at the speaker circle in the circuit, and it's been 20 years already, David.
Yeah. Well, let me back up slightly. Just, there'll be viewers that don't know who you are. Of course, I do. So you don't have to, you can give us an abbreviated bio. You told us every company you've been involved with and started a fund and all the stuff you've done. But if you just kind of get to the point of who you are, because I want to get right into the meat of this interview. Thank you, John.
Yeah, I've had over 20 years, coming out 25 years of experience in the metals and mining industry. I started out as a private investor for the first decade of 2000, and I got to know you and James Turk and Gata, Chris Powell and Bill Murphy. And then the latter part of 10 years, 15, 14, 13 years is running Silver Elephant. It's really Elephant is really my dear and heart and soul. It's had a couple of name changes from the past. So, post financial crisis, I took over Shell and thought I ran a company as a hobby, turned into a triple full time job, and for 15 years, I said coming up to my 15-year anniversary running Silver Elephant. Through the process, I've raised close to $200 million through the Toronto Stock Exchange, acquired projects all over the world, and traveled 35 countries, being hands-on in different continents in South America, North America, in Asia. And silver has been always dear to my heart. I've read a lot, obviously not as well endowed as you are, but read a lot about silver from the top butlers of the world to just about everything that's under the sun. And now we are marching ahead with our Silver Elephant Bolivia project, which is in production today.
Great. I'm going to backtrack a little bit further. I just want to kind of praise your accolades. And of course, all of us have our ups and downs and our good calls and our not so good calls. But one I won't forget really was your nickel call. We, get together now and again, not as often as we used to. And I miss those conversations. But regardless, one of them years ago, and you were saying, David, how much you know about nickel? And I said, not that much. And you went through the whole thing, and it wasn't that much longer after you gave me that rundown that we really had a huge move in the nickel market. I don't think we want to visit that. You can. I don't want to hold any of my interviews back, but just kind of pointing out that you are a student of the markets and that you know what you're doing. And again, like all of us, especially running a company, easier said than done. And we'll get into that later. But right now, I want kind of your overview of the market. So let's just talk gold and silver a little bit, what we did as a warm-up before we started the recording. And why don't you just go ahead and go through what you outlined as far as where we are currently in the precious metals?
Yeah, there's a lot to talk about, David. There seems to be a bit of separation between gold and silver. Um, Earlier in January of 2024, I said it's the best time to get in gold with a target of 2,800. And the reason for the rationale, gold was just to tap it under 2,000. I said it's going to go take off 2,000, which it did. And then if you look at the 2000, which is a two-decade neckline, and then the bottom, the cup and handle formation, and the bottom of the handle was around 1,200 in 2015. So if you flip that, if you flip the handle to the upside with the $800 gap to extrapolate it right to the other side, and you got 2,800. And that is on a linear scale. But on a log scale, then you'd be looking at potentially going up quite a bit higher from 1,200. So it could be 3,500 to $4,000. Silver is a bit different story. It's being a letdown personally, because we'd expect the silver to be at $50 already when gold definitely take out 2,000. And now we are 2,700, and yeah, we still are not getting to that $50 level. And in hindsight, I think there are a few reasons. Given your silver investor, your audience is interested in silver. I am not as you got to face the music, right? David, market is market. The market is always right. Sure. And then prior to my call with you, I was just looking at, I want to go a little long term, then we can go into the short term.
Sure, go wherever you want.
Is if you look at from say even the 1980s to year 2000, really gold and silver ratio is trading at a band of between 50 to about 80, averaging at about 70. But if you to pay attention carefully in the last 10 years, the band is really shifted to the upper quadrant to between sort of 70 to 100, and it's breached out 100 a couple of times, and really hasn't done that in history. So I'm just wondering why that is why is that, and especially in this current environment where there's really not any fear in the market, and with the equity taking out, going out all-time high, and silver does have that speculative element to it. It's just not getting that that usually typically gets from the post crisis, and it hasn't really sort of matched out with the oil price either. And the reason for that, David, I think is couple-fold. First, China is broken down. I was in China for a couple of weeks in September, and I'm in Hong Kong right now. And when I was in Beijing, it seemed almost like time stood still from it was 7-8 right before COVID 2018. And the division between the East and the West is also very clearly clear, in that there's no Google. The Google Maps doesn't work. The Google traffic doesn't work. And Google reviews, all but gone. And the foreigners are probably a tenth of what they were before in Beijing. The flights, trans-Pacific flights, are fraction of the frequency of what they were, and so you're seeing that very clear divide. And the point I'm driving at here is, with that come with a very keen interest in gold. It's not just central bank buying, but the likes of the Elon Musk, right? The Zeras, the EVMH, or the Koch brothers, the ones don't want to get into politics, just want to stay the status quo. And it's the dollar does not work. I try to get we have some acquaintance in Russia that I like to visit, and to get a Russian visa, the Visa and Master credit cards don't work, and the wires, the SWIFT doesn't work. So you're seeing that divide, and this is not something trivial. What I mean by that is you're looking at some of the world's largest economies are weaning off the dollar system. It's a quarter, it's 20% to a quarter of the world population that's getting off the system, and there's no let off on this divide anytime soon. So you're seeing, and as a result of that, and seeing how SWIFT is cut off of the Russians, and then there is a sort of a list of countries, right, of which are not the likings of by the U.S., and all of a sudden utility of the dollar is being diminished. And so that's why you see there's a gold doing a run up. The funny thing is, as I'm looking at the action daily, of course the top is always in hindsight. I don't see that, even though I try to sort of set my pride aside and say, gold is my $2,800 target, more or less, and maybe there's a retracement. But then the more I look at the market, as I'm traveling, not just staring at my screen with the charts and data, and then the cup and handles, I'm getting the feeling that gold's run is not over yet, even though in terms of time, in terms of trajectories, you can make a case for top of the gold, but I don't see that. And that's why every time there's a correction on gold, it's always made up quite quickly. And and if you see the rise, the trajectory of gold's ascend this year, it's not any knee jerk, and it's not again, and the market, the mainstream media hasn't really covered gold to the extent of which that the top seems to be in place. So even though gold has gone up more than 30%, 35% in the last 12 months, I still see that as a slow simmering. And on silver, the reason silver is playing catch up is because the outright collapse of the Chinese economy, in my view, and that silver is somewhat a speculative interest, and you just don't get that speculative element. And you and I talked about your subscription. You're not seeing that plateau, right? You're not seeing that sort of indication that silver is approaching a top. And if I look at my interest in my shareholders, I'm not getting a swarm of investors coming into my stock. And even though our shares is more than doubled this year, and more than nearly tripled from the bottom from last year, so
Right.
I can't really make out this. Every time people say this time is different, this time is different. I can't really make out of the market. Of what we're headed, especially given also, I'm about free renting at the moment, David, but that you have the election coming. Remember the 2020 election? There was a
Before
very,
we get
very,
in,
very,
before we get into the election, sorry, let me just hate to interrupt you, but I just want to add a couple things. Uh,
yes.
One, what I like to add is that, as far as I'm concerned, we've got a long ways to go on gold and silver. As far as I'm concerned, we're in the final leg, and we just started that really with gold breaking the 2000 level. My predictions were lower than yours. I was saying at the beginning of the year, I forget where we were, but we'll say 2000, so 2,500 and 30 on silver, and we've achieved
I would
beyond
be
that
conservative.
in
Yes.
both, you know. But the last leg up is usually the most dynamic as far as price appreciation. And secondly, the duration usually isn't that long. In other words, if you're in a 20-year bear market, or excuse me, a 20-year bull market, the last 2 years might be the biggest run. And you see that in all markets. You see it in the stock market, you see it in the housing market, and on and on. So that's point number one I wanted to emphasize. And point number two on silver, I think the main problem is it's been demonetized officially a long time ago, but I think it's been demonetized mentally for a lot of people other than students of the markets or people my age. Because, my kids, I mean, they've heard a lot in the background growing up in this place, with me, and they're not advocates of honest money or sound money, or really know all the principles and things that we know. But what's interesting about silver is that if you go back to when we started, two things. Number one, the industrial use was 35% of the market. Today it's 60. So in the last 25 years, the amount of silver going into the industry has gone up 2.5 times what it was. And the second thing is the paper to gold ratio. If you do what I wrote an article, as you may recall, engineering the price of gold way back at the beginning. How do you figure out the true price of gold? Gold was around 252 at the beginning, called 300. And if you did the amount of paper versus amount of gold, if you do the base money supply, just the currency, and you look at the amount of gold supply and you get how many dollars there are in the numerator versus gold on the denominator, it comes out with a division problem. And that number was 2,500 the ounce. And we were sitting about at 1/10 that price. So we knew we were undervalued, at least theoretically. Today, if you do that same math, Jim Rickards just did it a few months ago, and it's 27,000. So really, and this is a concept that hardly anyone can get. I know you get it, but I want the audience to get it, is really on a paper to gold ratio, we pretty much haven't gone anywhere, which is, gold's a constant. Gold's still buying me the same goods and service it did 20 years ago. It's served its function. But have I made any money or any profit? In honest terms, no. It's kept me even with or protected my purchasing power, but it really hasn't made me rich. Oh, it's up 10 times in 25 years. Yeah, but what else is? Just about everything else. So I want to make those 2 points. The last point John, is let's go back to the political scene. But one more thing, and it just popped in because I want to get this from you. I only have about 4 really good contacts in China, and one is from Taiwan. And I've been told by one that I really trust, used to work with me, and he claims that the Chinese public is buying silver now. And his exact quote, and I'll give it to you so you can tell me if I'm full of crap or not. He said they're buying silver at a faster pace than they have in 50 years, and he would know because he's my age. So when I was there, John, no one cared about it. The only investment I could find in silver in Beijing was silver chopsticks. I couldn't find a silver coin anywhere in the city, but you could buy gold. But so what's your on the ground tell you about the silver market in China right
So David, I don't see people rushing to bullion shops buying gold and silver in China, and their apathy I'm talking retail investments are just as laggy as the United States and Taiwan and everywhere else. There's a couple of things I want to bring up though. First of all, I don't think silver. I don't think my belief is gold is just as desensitized and demonetized as much as silver. The
now?
public has just as the least interest in gold as no interest in silver. Even my mom, who bought at 1800, of which I literally took him to the bank to the shop to buy, she sold at 2300, and she said she's never a big fan of gold. And my mom is 80. So I don't think the public has a preference of gold or silver, and I don't think gold's run up is because gold still carry that monetary status of silver. The reason the gold ran up, and I was being clear, is because gold has the liquidity for the billionaires, the set billionaire to make a run at it. I mean, the Putins, the Xi Jinpings, or Elon Musk, right? The Koch brothers, or the guys out of India, the richest guy out of like Carlos Sims, or the tycoons out of India or Indonesia. They don't have there's not enough liquidity for silver to make a run at. This is not
Right.
available, and and uh, you're right. The discussion of where silver should be versus where it now makes the silver prediction between 30, 35, or $50 entirely academic and trivial. So I think what's going to take with silver to sort of reclaim its crown or sort of re-experience its renaissance is first gold is going to make a run. And like it is right now. And like I said, the participation of gold and silver are entirely different. And the participation of mining shares versus these metals are also very, very different. Silver is not as readily available as gold. And there are in Asia or in China or in Taiwan, for example, you can go to bullion shops, you can buy gold, but not necessarily silver because
Right.
it's just not as big margin, it's bulky. But it's not because it's not as lustrous or as appeal, right? If you look at a silver coin, everybody I think take a look at the silver coin. Even my realtor, I gave him a silver coin to look after my home, and he become an avid silver collectors now. I think
Yeah.
everybody look at the physical, they would recognize because it's just still the test of time. It is real money. It's just that they're not being exposed, and neither have they been exposed to gold either. And that's not the reason. So I think the point is the price, the action, what we see today in gold and silver are not driven by retail. And secondly, I am optimistic now. I hear from you your thoughts is that I said certainly I don't see people rush to buy silver and gold in China. In fact, I think gold is playing silver. Gold is playing silver is play, so China is playing damper on metal prices because of the. I mean, they're having an issue with making mortgage payment. They're not going to have that interest in gold in shops, and they're trying to just feed, right? And they're not going to have interest in or the rich people that are looking for ways to get out to Thailand and to Japan and elsewhere. And so they're not they're number one sort of like I need to either get the hell out of there or I'm just or the poor people. And they see that big divide also that there's just not a middle class with discretionary spending to be punting on silver. Now, I am optimistic in the future on silver, but maybe not in the short term. And the reason is, in the short term, I am not as bullish as I was, and it's evident, as I mentioned about the elevated gold to price silver ratio, is that the people that were interested in silver, they're averaging your 70. I was the junior kid on the block 20 years ago.
Right.
So you see that vacuum, a gap between generations that are interested in silver. And the reason now I'm optimistic in the long run, 10 to 20 years from now, is the people that are Gen Zs, that are in their teens and the early 20s, they are rediscovering gold and silver. And the reason they do is that they're not, because their channels of learning and entertaining is not through the mainstream media anymore. And they are looking at different ways. Discovery Channel is one of the largest sort of YouTube channels out there. So they are learning through all different alternative channels and to discover gold and silver. So they're not as receptive to the management of gold and silver prices and the mass media brainwashing. And then they will see, and then they are into NFTs and all the different ways. And they say, hey, I can carry an ounce of gold, and that's $3,000, and I don't have to worry myself about opening bank accounts, which is increasingly difficult elsewhere, and the transfer of money and just concerns of the mobility of money. And so I'm optimistic in gold and silver of the rediscovery of that in terms of Aristotle's definition of gold and silver. It's fungible, it's divisible, it's transportable, etc. So that's the bullish point. But I want to sort of put a bit of caveat also. You talked about the industrial demand is never the price driver, right? If industrial dictates price, then oil will never go to negative in 2021. Right. And the affordability, the housing prices will not be as high as they are because the affordability ratio is always going down, never to go up. But that was never a good indicator of tops and bottom for the real estate price. But there is a catch, though, David, in the future too, that the downside for gold and silver is, again, when I talk Aristotle, is because of technology, the store of value and the ability to carry money is facilitated by technology. So what I mean by that is you can buy a share of Microsoft. It's fungible, it's divisible. You can sell in 2 days, you can settle, and you can get that money out very quickly. So I think there is other alternative compared to say 300-400 years ago. We can have titles, the idea of ownership, and you can easily change your ownership. Like imagine 400-500 years ago, if you have a house and you want to sell a house, right? You cannot just like sell the house sitting in the United States to somebody in France, and you cannot DocuSign it, you cannot transfer your title electronically. So then in that way, a lot of the assets are immobile. They cannot act as money because of that nature, but now they're able to do that. So I think the transfer, just the liquidity of different asset classes and the ease of which the ownership can be transferred, and through the likes of ETFs, of which they can be divisible, really lends itself to a competition for gold and silver. So that's a little downside for gold and silver. But regardless, because the suppression, which is evident in the metal prices, just that, and also just looking at, like I said, the amount of money that's amount of liquidity that there is an allocation of that towards gold and silver compared to other classes like NASDAQ and real estate and a lot of different asset classes just make gold and silver very undervalued, right?
Yeah, said a lot, and I agree with almost everything. I do want to circle back slightly to what you did say, just emphasize. That's really, this has been institutional driven. And going back to China, if you look at the Shanghai Gold Exchange, you see a great deal of emphasis in the silver market. And for a while, there's been a spread between, the COMEX listed price and the Shanghai price. And so it does seem to be, the institutions that are driving both of these markets. I mean, retail's pretty much dead in North America. Adam Taggart just wrote an article, and I was going to be a little snide on his Twitter, and I decided not to because that's not my personality. But, and I think he knew it before he wrote it, but he interviewed somebody recently and indicated, how bad the retail market is in both metals and, the amount of inventory that wholesalers have. And I've been saying it for months now because it's been that condition for a long time. But and also to reemphasize that it's the margin that drives the market, and that's monetary demand. But monetary demand comes from from institutions. Then that's what will really move the market. If you go back to 2020, the amount of silver bought by institutions was 320 million ounces. That was a one-off. I mean, if you add the retail, which is 200 million ounces, that was 520 million ounces. That's more than 50% of the silver supply going to investment. We've never seen that percentage in investment in 1 year in a very, 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 very long time. I'd have to go back and look at what the Hunts did to see if it was even that high or not. It might not have been that high. So my point is that I think going forward, you will see, as you said, more and more institutions coming into gold. Some of it will spill over to silver, and I have to take a little bit of a poke at you, John, for fun. But silver's too small a market, to get any real institutional investors into it. And for the most part, you're right. But we never forget about Mr. Buffett, because Mr. Buffett did buy 130 million ounces of silver back in 1998 or 99. And that was a huge percent of what was on the COMEX. It took the COMEX a long time to deliver all the silver. They delivered 90 million ounces off the bat, and it took them a while to get the last 40 million ounces he'd bought. And yet it was such a small buy for Berkshire Hathaway, it didn't even show up in his annual report. It showed up under the word miscellaneous, because by law, if you have anything in your portfolio less than 2%, you don't even have to say what it is. So could have been pork bellies. It just happened to be silver. But anyway,
David,
yep, go ahead.
Excellent points you brought. I want to just chime in a couple of things. I did a lot of research on Warren Buffett, and I actually read what he said about silver and watched what he said about silver. My belief is Warren Buffett made that investment, and he got slapped on the wrist. I don't think the liquidation is voluntary. And secondly, Warren Buffett had to almost make a distinction on purpose that he bought because it's not because of inflation. He always said that gold is you cannot eat gold, you cannot eat US dollar either. So he is well recognized inflation in the paper being fiat, and so he made that investment, but then he got slapped on the wrist. Yeah. And so that he had to make the distinction how he sold, and the reason he sold and the reason he bought, I think is much all disguised from what he really knew. And secondly, you talked about institutional interest. I want to draw that a distinction between institutional interest of money managers versus a tactical permanent paradigm shift kind of tactical allocation. Sure. So what I'm being that by would be somebody like Putin or Xi Jinping. The guys are not; these are permanent holdings. They're not like they're not in here to increase their wealth by looking at how much more money US dollars in their bank account. That's not how they look at things. They're just like, okay, I'm preserving my status quo. I need to diversify away from the SWIFT system, and this is my tactical allocation. Another way to look at it, if you look at some of the highest rises of buildings like Shangri-La, a lot of these high rises, and especially in Asia, if you look at night, these residents has like 20% of the lights on, right? So this is like an allocation, and these guys are worth a bit starts with $1 billion, and so they are making that technical allocation in gold right now. That's my firm belief, but I don't see that technical allocation into silver yet. Right. And so I come on another broadcast just a week ago. I think that silver is going to pique their interest a lot more when it's over $100 versus $35 because you have a lot more liquidity. You can make a case exactly like you said for $2,500 silver, just as well for $50 silver. And the scenario that silver rise is going to play out is not going to be a Warren Buffett episode, because if we were to do that today, given the sensitive nature and how the power surveillance, the tools available, I mean, all the banks are pretty much going to be their roles are being set aside given the central bank digital currency. They don't need these intermediaries anymore. So that they directly control this ownership of everybody's households in their holdings. Is that if you were to be if you want to repeat if you do today what Warren Buffett did back in early 2000 to get silver through COMEX, instead of getting it delivered, you're going to get a call from the Fed. So the way you got to be, and the gold is a lot more liquid, right? So maybe it's easier for you to call through LBMA in London, or even the trading in LBMA. You see the Scotia McCarter, they close the door. I mean, with such a robust market, how come you don't have trading in London? Because all the LBMA members are these trading volume is illusion. It's creating a fake phantom of volume to maintain the legitimacy of these exchanges. but it's really the Rothschild's right hand feeding to Rockefeller's left hand to create that volume. But there's not a real player, in my view, that's accumulating metal through the commodity metals exchange. So the way they
Exactly.
go about it is they have to go through different channels of they have to go through the different channels and to establish their holding. Certainly not through COMEX. And the guys are looking at it, I can do that for gold, which I'm doing right now, but I'm not going to go through that exercise and that arduous steps to get 100 million ounces of silver, which is probably the estimate all they can get right now that's available for the taking. So that's 100 million ounces of silver. That's like $3 billion. It's like a drop in the bucket, right? Can't even satisfy the appetite for one person. So that's what I'm seeing right now. So it's not that institution, even institutions, the convention we talk about institution, the state streets, the funds are. I don't see it that way. So and so all in all, I'm not seeing a speculative interest in silver right now. And the other thing is, David, I want to talk about briefly is I watch the gold and silver action. They're very, very different. They're not synchronized. What I mean by that is I see gold's purchase right now is technical, permanent, paradigm shift allocation. But what I see silver is very spotty. And I just want to sort of share my observation, especially recently in the last few years. The cartels, they are watching the market like a hawk. And the managers, what I call them, a lot of times they will engineer and manufacture temporary tops, the cup and handle formation, to make the market look like a top is resting in place. I think the perfect example would be around 2020 for Majestic Silver. Went from like $18 to $27. Another episode replay was back early March or April when first Majestic went from $10 to $11 in a hurry. That sort of action just doesn't. It's very peculiar to me, where there's almost complete nonchalant action, and all of a sudden you got this hooray of buying, and from there the buying all then disappeared. So it just seems to me that we are witnessing a lot of that again, where the cartels would deliberately drive up the market, both in mining shares and in metals futures, and to try to engineer a top, and then to get everybody who's interested in the market in believing that the run is different this time to buy into the market, because of course the price is higher, the purchase price is lower. And then from there they pick away the market. And they are doing that. Used to be not often, but they're doing like on a weekly or monthly basis. And I believe they're doing that again a couple of days ago, driving up shares 20-30% over a few trading sessions, just try to exhaust that interest and then try to do all they can. And also the action of the dollar is if the dollar is going to go higher. I'm not in the camp of the bearish of the dollar. It's a voucher system to pay the peasants, and you still need a form of which that's acceptable to them to sort of continue this game of Ponzi's. And so the way I look at it, the dollar has been rising from 100, which is very, very strong support. And I came on the show. I said if silver is going to rise in this current run, I need to do so quickly because the dollars is head up, and since then the dollars head up almost 4%, not almost, more than 4% in less than 2 weeks. So that tells me that so that there's a lot of ways that the cartels try to suppress the market, and the number one method is to jack up the dollar, and they're jacking up the dollar by getting all the central banks elsewhere to lower interest rate, and then to delay the interest rate hikes as delay the interest rate ease as long as possible by the Fed to try to have that interest rate differential for people to stay within the dollar. So I see the dollar could potentially go even higher. I was thinking maybe the dollar is going to top out by 103.5, which is 200-day moving average, but it slides through that 200-day moving average with the ease like it was not even there. And now it's trading 104. It could be go to 104 and 106, even 108. Could even go to 110. So the question is, can gold and silver continue? And then the gold rise, I was thoroughly impressed because it just continued as if the dollar was not to do with all that. So it just tells me the gold accumulation is genuine. It's a physical buying. It's not a speculative algo trades as a counter trade to the dollar. And so that just lends me a lot more confidence in looking at and not seeing the gold ever going to go back to the 200 moving average. Because I was thinking when gold when dollar was at 100 only 6 weeks ago, and gold was at 27, 26.50. I thought that's a possibility if the dollar were to go to 105 or 103, the gold might retest 2,300, and silver could be in the 20s. So that was my reservation. But now, looking at where we are, gold is acting exceptionally strong, and the silver are still, it's getting a little better now by the day. And I think the real spectacular rise, David, potentially is when the dollar finally is go as high as it possibly could, right? And then from their point, the first weakness of the dollar, you're going to see the real speculators come in, because they're waiting, just like everybody, like myself, thinking, oh, this dollar is going to rise, and then maybe the cartels are telling the New York funds to stand down because they're cooking up the dollar. So everybody now is waiting. The bystanders interested in gold and silver are waiting for the dollar to top, but yet the gold and silver are rising in spite of that. So then I'm thinking, well, the real spectacular blow off could be sometime in 2025 when the dollar tops at 110. Because then the first sign of dollar go from 110 down to say 105 or even 102, then you could look at additional 20% gain on gold. And that
let me jump in, John. That's one of the most important fundamental things I look at to assure myself that the final leg is taking place. Because in the final leg of a bull market in metals, the dollar and gold will rise together. And I've said that many times, and it's taking place. Want to move on to the miners, and going back just months ago and recent times. I mean, the measurement of the mining shares to the metals has been pathetic. The measurement of the mining shares to the S&P has been pathetic. I mean, basically, if you're looking for the most undervalued asset class ever compared to anything, oil, the S&P, gold itself, has been the miners. It's been horrific. And yet that does spell opportunity at the same time. So, you can revivify that. You can, add on to that if you like. But I'd like you to just drill from there pretty quickly into silver elephant, why you chose it, what the grades are. Yeah, it's Bolivia. Yeah, it's high altitude, but you've done a lot of work there. So give us an overview on the miners and then jump right into silver elephant and give us a rundown, please.
Yeah. So I'll give a two-minute rundown on what I see on the miners in general, and then about another couple of minutes to talk about silver elephant. 80% of the shares trading outside of a company's specific news release are algo driven, and then this is not just the First Majestic, which is a prime target because they're trading symbol, right? But you're looking at even the small shops like Silver Elephant. I am very sure from deductive reasoning and critical thinking that it's algo driven, because I know who my shareholders are. I know when I issue my shares, and these shares are trading some very good volume and some very heavy selling and very big bids for no reason. Like, I don't know where they're coming from, and also there's slight change in the bid and ask and the tape. You will see the bids and ask change instantaneously. So it's my belief that 80% of the shares are algo driven, just like they're managing the metals market. You certainly cannot have a raging mining shares going crazy when the metals are. You don't want to create that curiosity or difference of how metals and shares are acting. So I think that's the first thing, that there is heavy managing of the metals, then there's heavy managing of the shares. And secondly, it just showed that the poor performance of mining shares because they haven't delivered dividend cash flow. And it's asset depleting business. So the First Majestic you see today are different from what was 20 years ago because the mines are gone, the reserves are gone. And that hasn't really caught the metal prices as indication hasn't caught up inflation. And that's why the companies weren't able to deliver dividends to appeal to a dividend to a normal class of investors. Right? Because if you're buying gold and silver right now, it's for that optionality, mining companies' optionality. So that's the second point. And then third, as I mentioned briefly, is that because gold and silver is an asset depleting business, you got to really treat it as an optionality to invest, because it's a derivative instrument to the metals. And there's geopolitics, and there's mining, and there's inflation. So it is a derivative investment in my view. and very highly speculative. And coupled with that, with the mismanagement of that, a lot of the mining companies, particularly in the junior mining sector, because it just have hard time attracting talents in mining because nobody inspired to become, I want to run a mining company right when I go to school. So I think just the class of and I'm talking this from my heart because I've been in the mining industry for 15 years. I've hired more than my share of people, and a lot of the times there are really misfits that couldn't hold a regular job at Rio Tinto's that decided to go out and venture out and running a mining company, a junior company. So I think just a lot of combination of factors that are really putting a lid on mining prices. Having said that, it's a blessing in disguise because the prices are very, very low. Most of the mining companies are below their replacement value. Even for producers, the cost of building a mine, the length of time it takes to build a mine, is far exceeds the value, the market valuation assigned to these miners. But you got to look out for is mines with longer longevity. And so there is some sciences that goes into not just all ounces are equal, and then you got to talk about having a sort of a more geopolitical diversification. So either on the company level or sort of you got to pick and choose which mining companies that are operating in different jurisdictions. Onto Silver Elephant. Blink of an eye, have had this project for almost 10 years. The company of which David Smith, while mutual acquaintance and good friend of, unfortunately passed away, he visited the project in 2018, 2017, before COVID. The project is in production. It's got about $50-60 million spent on it, 150,000 meter drill, over 100 million ounces measured and indicated. It's never short of silver. And so we managed to get a partner called Precious Indians Metals. They have a processing oxide plant in Potosi, about 150 kilometers away, and they're scraping the oxide off the top of the deposit, and they're trucking it to their deposit to the processing plant. The deal was signed in October last year, a year ago, and we are celebrating 1 year anniversary. And never have I imagined 1.1 million ounces of silver is being dug out of the ground and being processed. So we're past that million ounce mark. In the last 12 months, the operation run uninterrupted with good local support. We're now always aligned 100% with each other, but they never stopped our operation. Just shows that we have a mutually respectful relationship, and we recognize sort of our end goal. So we're very, very excited about it. It is $7 million over 3 years, a fixed contract over up to 800,000 tons they can dig out. In the first year, they already took out 200,000 tons, and that was just the colluvial materials, of which our resources are barely budged at all. So I think this wildly exceeded all of our expectations. However, we do listen to the critics, like the Jeff Bezos say, if somebody give you a criticism, you look yourself in the mirror and say whether it's true or not, because it's a $7 million fixed contract over 3 years, of which we got about 3 million already, 2.5 million in January. And they pay for all of our operating expenses. So we're a few of the company actually make money, but we don't have the upside, David, right? So we are actually digging a tunnel into the sulfide operation, into a sulfide enriched areas. So the sulfide production will start by the end of the year. It's not going to be a lot. We're going to do like 100 tons per day, but the grades are 400 grams silver sulfide. They're trucking 200 grams silver oxide, which is exceptional. And underneath that, the grade is double for the sulfide. So we're doing sulfide digging on a small quantity amount, but I think we're going to net potentially a few $100,000 a year after a month after all the taxes and royalties on just a small minor sulfide operation. I think the key here is to demonstrate that we are handling our operation very carefully, watching on our downside, because I don't want to be hedged. I don't want to be having bank debts, etc. And in conclusion, David, I think the worst is over. Our stock is one up more than nearly triple from the bottom. We doubled our price from this year. We're one of the best performer junior miners this year in share appreciation, price appreciation. And we also diluted minimal amount of shares. We diluted around 20% this year. So we still have a lot of naysayers. John Lee sold, insider selling. I said, I collect my shares in salaries. We never dilute ourselves at the bottom of the market. I sold some shares in the market to try to make the ends meet for the company. And since then, I have resubscribed to the shares back to my original position. at a higher price than it was before. So I think all along we're really embarking on a very, very exciting story. The production is going to increase, and we just have as good of a exploration story if we want to expand the resource. But right now, NDN is going to finish up their contract sometime in mid-2026, of which then additional oxide, they're going to have to pay for that. And we're starting our sulfide operation, which initially will be toll milling, but towards the end of 2025, sometime we're going to get a partner to build a sulfide plant and to show our commitment to the local community that we are here to stay. So all in all, the project is really getting de-risked, and over time you're going to see right now just enough cash flow to pay our bills, but then that we managed to avoid dilution. But in the months and in the quarters to come, you're going to see very, very exciting development to expand our operation and increase our cash flow, provide the upside to the rising silver price.
So investors that are interested in learning more, give us your website, and then I'm sure you have a box you can fill out to get on your mailing list. Why don't you give that out for everyone?
Certainly. silverlf.com is our website. If you were to go to our homepage, you will see we actually did a drone footage of our current production that was shot in April 2024. 60 trucks are moving daily. We're doing 1,000 tons per day. So we're one of the very, I think in terms of throughput, we're one of the top ranking junior producers out there. I'm also quite active on Twitter, not as I've been busy in the last few months, but you can see some of the market analysis, including the call I had for gold 2,800 and also my call on silver as well. And also sign up for our Silver Elephant Twitter, of which you can see the tunnel of which we're digging to get the silver, to get the sulfide operation underway. So we are really very busy moving the market, and it's just a very exciting chapter to be on. We're selling our valuation 30 million market cap with 100 million ounces of silver. We're charging 30 cents of silver in the ground, and about a third of the replacement value of the money that's being invested in the market. And everybody in the company, there's been some management turnovers, just like every other company. And I think now we have a great team. We've been working together for the last 4 years, 3-4 years. So we're just not to borrow, we're very excited to turn the page of the worst and into something that's a lot more exciting.
Well, very good, John. I always appreciate your time. I know mining's probably the toughest business to be in. Not that any business is particularly easy, but you've come a long ways, and I'm happy for you. And we will get this out to on our blog and put it where it's necessary. And I thank you again. Is there any closing remarks for we fold up and call it a day?
David, what I want to share my nugget of wisdom, having been in the market for 25 years, of which I make a lot of money and lost a lot of money in this market, is to quote my favorite book, Randomness is a Stock Operator, is a lot of people who can catch the bottom. They've seen a lot of people who caught the bottom, but most of those people are not the people that make the most money. The people that make the most money are the people that sit tight. And it's very difficult to do, because the reason is if you pick the bottom and you do a trade, you're thinking to catch the bottom again. And there's certainly a lot of money you can make on the silver market in particular, where you sell and wait for another opportunity to getting at a lower price. In particular, the metals market, gold and silver, in a decade, typically the gold and silver was spent 8 years going sideways and 1 year going down, and then 1 year going up. And we are entering that blow off phase, David, like you said about rising dollar with rising gold. It is happening. So this time could really be different. And so my feedback is you want to have a core position. You've got to really stash it away. And you want to have some physical silver. You don't want to be on futures exclusively or on the ETF, because they would hold your trading like they did with nickel 3 years ago, arbitrarily set a settlement price, which could be 50% of the closing price of the day they close the market. And They will rob you, David. They will rob you. They've robbed the nickel market. So they will rob you. So you want to have some physical silver right now. If you miss the bottom at 21 and you're kicking yourself thinking you could try to go back again, I don't see gold going back to 2,300. So the silver downside is very limited. It's taking out 3,250. You don't want to be sweating over that $2 to $3. You got to have a core position, and then you just want to have the market sit tight. And then if you miss next 6 months, you could be missing the entire ride of what you've been waiting for from the day you got in the market 20 years ago. So I want to make sure you don't play too cute and got being shaken out. That would probably be my most valuable lesson that I personally learned, and I want to make sure I share with the audience.
Well, very good. Sage advice. John, it's a pleasure. We'll meet again. Make a great rest of your week. Enjoy Hong Kong. I love it over there, as you know, and we will catch up again soon. Thank you.
Wow, David, thank you.